What is up, everybody? Logan here coming at you guys with another video, and I am back on YouTube. I took a couple weeks off. Nothing crazy happened in my personal life or anything. I just want YouTube to always be fun, and that's one like goal. I'm trading, I'm doing a lot of things, working with brands, and throughout the day, I'm also just trying to live my life, be happy, stay healthy, go to the gym. And I always want YouTube to be fun, right? Like I'm fortunate enough to have this platform. So I just want to upload when I feel like it instead of like mentally feeling like I have to, which is a big thing with a lot of social media people. So yeah, I just wanted to say that right out the gate. There's nothing wrong. I haven't been gone for any specific reason. Just overall, just haven't been uploading because I want to make sure it's super fun every time I do it because I want to do this for a long time. And I think anything you do for a long time, you have to really enjoy. So let's get into this one though. I do want to take you guys over some of the trades as of recent. We've collected a pretty nice credit. I think we're close to about $2.05 collected, which is really good. It's about 40% over the last 3 trading days on the same amount of collateral. So we're going to dive into this one, talk about that a little bit. But I've been just trading 1 DTEs as of lately. 0 DTEs, I had one good setup. But the 1 DTs have been almost bread and butter because we've had so many gap ups and gap downs lately overnight where it's like you can put a trade on, and if the market's gapped up 0.4, 0.5%, you could literally take that PCS off, or it'll be close to worthless. Or vice versa, right? If you're in a CCS and the market jumps down, because we've had a lot of moves happen overnight as of lately. So this is the expected move chart that we use every day for 0 DTEs, and it's kind of helped me a little bit more with the 1 DTEs too, right? Because it still shows me the odds out of the money, the minimum credit you would need to receive if you were doing that just strictly on opening a trade and letting it expire, whether you were fully in the money or not. This was for the 28th. And today we just didn't post one. I think this is the first day we've actually missed it since we started this, but everybody was just busy at the end of the day yesterday to actually get it posted. Take a look over here at my trades and what we've been doing a little bit. Like I said, a lot of 1 DTEs. And for example, like today this would have expired worthless, but I wanted to put another trade on anyway for the next day. And since we're below the 200-day moving average when I put these strikes on, currently the market's actually above the 200, but I put my strikes on below it this whole time. And this is a trade we've been managing up here. Collected 70 cents total in this trade, and we're at 3,900 for tomorrow. So hopefully the market continues to hold that 200-day for support. That's a big support level, right? So scrolling back up here, we had the 39.35, 39.30 for a couple days ago, and I always give this little write-up on like why I'm taking the trades. But my main thesis over this last week and why I've just been selling put credit spreads besides the 200-day of support is because if we go to my standard deviation charts, and I'll post them occasionally, when I'm taking these trades, one thing I want to do is take a look at where are we on the playing field, because the market wants to revert back to the mean over a time frame. You can see as we get 1 standard deviation away from the upside, we always tend to come back. And same with when we're at the downside, which we are now, the chances we continue to leg lower at this specific moment is very low if you're comparing it on a standard deviation chart, because the price always wants to hover around the mean. That is the whole goal, right? And even over here, when you start to break out of these zones, which it does it a little bit too to the upside, like that's how you knew at 4,200 we were getting extended on SPX. So we're in this like consolidation chop range, and hopefully we can figure out a way whether we're going to break up or down, and then we could take advantage of that move as well. But that's one thing I really like about these 1 and 0 DTEs, is you're not stuck in a huge market move unless the market moves against you in a very short-term time. And it has to blow through the expected move to do that as well, because you're taking these trades outside the expected move. And that's been my thesis at least. But that was the one reason why I've been bullish and just literally trading 1 DT PCSs, right? Like 3 DT put credit spread that we got for $1.40. And we use that as a hedge on another PCS and another trade. So overall, that's been cool, but that's been my whole thesis and all I've been doing for the last few weeks. And, anybody in the Discord will tell you, and if you guys want to come trade with us, the link is below, that I've just been selling put credits. I had 1 call credit spread, and that was actually on our 0 DTE, which was on the 27th. That's the last one I did for a little bit. And before we got out of this other trade back here, yeah, I sold that for 40 cents to make a nice $1.05 condor that day, because we were selling a put credit spread that day for about 70 cents. And then the CCS was a nice layup trade because yesterday at 10 a.m., if we go to the 5-day, we had a pretty nice candle that spiked pretty far up and then immediately started selling off when we came into that resistance around 40.20. And you can tell we've had that resistance around here because we peaked here, back here, and here. Just using Google for an example to show you guys. But even today was really nice. Even when I was down at 39.25 for today, this is where the 200-day is, right around this 39.40 level. We bounced, and then we've had more bullish development anytime that we've come down here. But overall, the market's not showing me anything that's screaming we're going to start ripping, and it's not showing me anything that's screaming we're going to start pulling down. But my job as a trader is just to react to price and not predict it. So if we go over to the 0DTE checklist, we have our expected move math, right? That's that chart that I show you over here that we can use on a daily basis to really help us make our decisions. And then same with over here, if we go back, did we gap up or gap down? Today, we actually gapped down slightly, but the gap filled almost immediately in this trading day, which was really helpful. The VIX has been staying around this 20 to 22 range lately, so overall, still more bearish than bullish because you want the VIX underneath 20 to really get you going in a bull push. Did we exceed the expected move yesterday? We didn't, right? Just a nice flat day overall. We rallied after the morning and then fell back down. Where are our levels? And we're looking at, right, the 200-day I mentioned. We have resistance around 40.20. 4,000 as well as other big resistance points, right? We've seen been like magnetic to 4,000. Position sizing, you should not be sizing any of these trades with more than like 5 to 6% of your portfolio on the initial size, because when you have to start to roll stuff, you're going to find that your capital runs out really quickly if you're like sending your portfolio in these trades. And then the timing part, I get a lot of questions about trade timing and how it's changed over the last few weeks. Is for me specifically, I'm still doing everything the same. I'm just waiting to take trades until power hour as of lately, just because at the end of the day, we've seen some pretty decent moves. Like yesterday, for example, power hour alone dropped us 15 points, and that's a pretty decent chunk when you're dealing with a short-term to expiration, right? Like either you're going to see an unrealized loss, unless you're on the right side of the trend, then you're really set up good for the next day. Like today, we put our new trade on when we were down at 39.43. So we have about an 8-point buffer, and we've collected a decent amount of credit off the trade since then, which is cool. So hopefully we can stay up over into tomorrow and continue to use this support zone as a little trampoline to just kind of hover our strikes down here on. Choosing strikes, and I choose my strikes based on our levels, right? And you can make those based on, you can use mean reversion, which is a big one for me, support resistance that goes back 90 days, 2 years, whatever it is that you use for your specific trades. Risk management, like I said, we roll contracts if we're close to getting tested. And one reason I roll versus stopping out is there's so many times I would have gotten stopped out. My win rate would be much lower, but also by stopping out more consistently, you're going to see your profit and loss get skewed, and you're going to have a lot of times you created a loser that would have been a winner. But if you just roll at the right time and then allow the market to get exhausted one way or the other, it will eventually bounce back to the mean and you can get out of your trades. So, and then back to setting expectations. I think it's a good reminder for everybody. Setting expectations is one thing that a lot of people need to do, where it's like, if you look at your account and you can even shoot for a 3% growth on the month doing this stuff, or even a 2%, like you get to the end of the year, you're at 30% return on your whole portfolio. So if you're doing that with 100 grand, you could be up to 25 grand in profits on the year. And you might be hitting at a crazy rate of like 50%. But even from a realist, because I know people who are making 10% on their port every 2 months. And that's not uncommon if you're risking a little bit more, right? That 5 to 6% and doing the right thing every day. But also you have to be mindful that like you're carrying risk and leverage, and can you handle it, and what's your decision making while you're trading? So that's another thing to keep in mind. But that's going to be everything for me in this video. I hope this helped you guys a little bit with how I've been trading as of lately, and the nice way to trade these 1DTEs using this expected move chart, and just slowly finding your way and what makes you comfortable, and looking at the odds out of the money so you can set a really good expectation of being a long-term profitable trader. Vance is also coming back on the channel, and Halcyon as well soon. So I'm excited to have those guys back on. But that's going to be everything for me. Make sure you guys leave a like, a comment below, and I will see you guys in the next video.